Hello everybody. Oh, welcome back for another video. Hope you're all doing well and that you're all having an incredible day. The question for today is... No, never mind. I was going to ask a really crazy one, but I think I'll ask a more realistic one. I'm going to ask, do you think that Ethereum can ever pass by Bitcoin to become the number one coin? I was going to ask, do you think XRP can ever become the number one coin and pass by Bitcoin? But I don't want people fighting in the comment section. So, and without any further ado, let's jump right into it. Welcome back to Optimistic News, where the news about the cryptocurrency space is always optimistic, which is great. As I've mentioned before thousands of other times, it is quite rare that we get any kind of negative news about the space. So always getting positive news is quite nice. That means that the space is doing well. It says in the cryptocurrency space, certain trends and movements offer valuable insights into market sentiment and potential future shifts. One development highlighted by crypto analyst Ali Martinez at the end of February has caught the attention of the crypto community. A significant increase in the number of BTC whales. Yeah, you know how we're always talking about how a lot of people are always buying a lot of Bitcoin and then the price goes down and then they buy even more Bitcoin, and then we've been getting news about all the ETF stuff and they're buying up a lot of Bitcoin, and over the last maybe 15 years, we keep talking about how a lot of these people are just accumulating all the time, and the most time that they usually also tend to accumulate is especially over the course of a bear market. But as we are nearing and anticipating the Bitcoin halving, the buying has kind of picked up by a lot. I would assume that it has to do with what we've been going over for a while now. When you, as an investor or a heavy-handed investor, hear that one company has purchased nearly 1% of all Bitcoin in 4 weeks, it does something to your wallet because you understand where this trend is going, especially as we have not even entered the actual halving period. According to Martinez, over 150 new Bitcoin addresses have emerged. Now, here's the interesting part. In the cryptocurrency space, for some reason, I know that numbers are everywhere. Got it. The really interesting part is that a lot of times we will hear numbers, or people try to hear numbers or what I'm saying, and it won't have much significance for them. That is to say, 21 million Bitcoin, you understand 21 million, but you don't really understand the significance of it comparative to the number 1 billion, because a billion sounds like a lot more. Obviously, different numbers. Cool. Got it. When you talk about 150 new addresses, you go, well, that's cool. It's just 150 new addresses. There are 8 billion people on the world. What's the significance of the number 150? These 150 new addresses have each purchased more than 1,000 Bitcoin in just the last month. 100. Now, even if we spread it out across 150 people, 150 people have accumulated 150,000 Bitcoin out of a possible 21 million, which we're only at 19 million, and 4 to 6 million are lost and gone forever in 1 month. Here's a little tweet for it right here. It says Bitcoin whales are going parabolic. In just the last month, over 150 new BTC addresses, each holding more than 100 BTC, have been created. And there's a little chart for it right there. In the ecosystem, the term whale refers to individuals or entities who hold a large amount of crypto. Specifically, a Bitcoin whale is someone who owns a Bitcoin address with a balance of 1,000 Bitcoin or more. That's a lot of Bitcoin. Can you imagine oh my, that's so much Bitcoin. Given the value of Bitcoin, these whales have significant financial resources and a result, the potential to influence market movements. There's another thing over here. So. Where's the other? Is it just not here? There we go. Earlier today, another analyst, Ki-Young Ju, who we've had in the news before, the founder and CEO of the South Korean blockchain analytics startup CryptoQuant, pointed out that on-chain data, a term referring to the publicly available transaction records on the blockchain, indicated a significant accumulation of Bitcoin by new whales. According to Ju, these wallets are currently sitting on a 38% unrealized profit, suggesting that despite their substantial gains, these investors might be aiming for even higher returns before cashing in. Yeah, of course, nobody wants to be the pizza guy. We've had articles like that before, and I've lightly rolled my eyes. I understand the significance of it. You would normally assume that in the event of you or someone else putting 10, 15, 20 million dollars into a market, making 38% returns, you would usually see some kind of a profit taking. But with the expectations that we could be on our way to 100,000 by summertime, well, not many people are probably going to be willing to sell. Nonetheless, if we do a 4 to 10x in price over the course of the next 18 months, 38% looks great, but you know what looks even better? An additional like $38 million in my bank account. Yeah. Whales have continued to buy. They have been buying for quite some time within the cryptocurrency space. It is interesting to see all the news that we continuously get. It's nice to always nice to have optimistic news, especially as we have seemingly gotten past the point of governments talking about banning Bitcoin or getting rid of Bitcoin and all these other things. We're kind of at this point where we're getting a lot of like accumulation and seeing exactly what's happening within the space. That's the Bitcoin whales. And always keep this in mind as well. Those are 150 wallets that have over 1,000 Bitcoin. That means there are other wallets that have 999 Bitcoin that do not meet that metric. Realistically, over the course of that same month, if we had 150 who were buying 1,000, we probably had 500 who were buying 100 Bitcoin. People who bought an entire Bitcoin. People who bought 3, 4, people who bought half a Bitcoin. The accumulation is there. Always keep those numbers in your mind, especially as we get towards the halving. That's the whale accumulation news. Yeah. Let's move on. Also in optimistic news, this was not popular, but it also, I think, should have definitely gotten a lot more attention. This was common news a number of years ago. Very common news. The current security models for Bitcoin and Ethereum are currently making 51% and 34%, I'll explain in a second, 34% attacks, respectively economically unfeasible, according to a new research paper published in the middle of February. A 51% attack is an attempt by an entity to gain control of more than half of a blockchain's mining hash rate, theoretically allowing it to alter the ledger maliciously or however they decide to do so. Similarly, a 34% attack attempts to manipulate the consensus of the blockchain, this is for proof of stake, to approve or disapprove specific transactions by acquiring network stake. So, a number of years ago, this was a gigantic fear. I think a little bit of it was blown out of proportion, but that's also my own personal thing. It's more of a, The idea was many years ago when people were looking for the allocation of Bitcoin's mining rigs, these big, machines that are mining Bitcoin. We found out that around 55% of it was within China. And as you can assume, a lot of people in the US were not too happy that it was specifically in China. The really interesting part, for those of you who missed it about 2 months ago, was that it got really cold in Texas, and it got so cold that a lot of their mining rigs had to be turned off. And I think Bitcoin's hash rate dropped by 20 or 30% as well. So, centralization once again. But the idea was basically a lot of fear mongering, and people were like, we have to get the hash rate out of China should the government decide to do something. For those of you who do not know, Bitcoin mining in China is still legal. You just have to go through a lot of paperwork to be able to do so, but there's also the same in many other countries. So the idea was that if at some point the government became angry, upset, didn't want it, they would be able to initiate a 51% attack on the network and therefore shut it down. But it's not actually that simple. In order to be able to actually go through with a 51% attack, you have to not only control more than 51% of the network, but you also have to have other people willing to do it with you. You have to find other people who have these huge mining stations around the world or just within a given region to all agree to do the exact same thing. There's a bit of an issue with that. It's because of network consensus and also because of forks. What a lot of people were unaware about a lot of years ago when people were very scared of the idea of a 51% attack on Bitcoin is that, let's say, for instance, North America and Latin America and Africa are on one side. And let's say, for the sake of argument, we have one country who has 51% of the network's power and they decide to go, we're going to destroy the network in some sort of way. And usually one of the simplest way, back then the idea to destroy Bitcoin was by creating one coin. It sounds insane, but if you change a 1 to a 0 or a 0 to a 1, you can destroy an entire ecosystem. If the idea is that there will only ever be 21 million Bitcoin, and someone changes the protocol to say 21 million and 1 or 22 million, you've ruined the idea. But the problem is, not the problem at all. The really good part is that if you see that one entity is acting maliciously, Latin America, Africa, and North America, those who are running mining equipment there would simply band together. For the sake of argument, I'm using those 3 continents, would band together, and they would simply fork the blockchain at the transaction before the malicious attack happened. You get it? So they would literally, you would have to spend an enormous amount of resources to have those many computers, to get other people to agree with you, for no one to spill the beans that this is going to happen, to finally execute it. It ends up happening, and then everyone else goes, okay, well, they did something wrong to the blockchain, so we're going to simply continue it from the last transaction from before, and then make a new branch that ends up going to the left. Imagine you cut down a tree branch, but the rest of it still grows in the other direction. The problem for the attacker is that, cool, they've, ruined the other chain and so, but they now are making no money. All those mining equipment machines that you have, you're now running on a Bitcoin blockchain that no one around the world is going to use. So the new chain, which has split to the other side, is now the brand new Bitcoin. This is something similar to what happened a number of years ago with Ethereum. They did it relatively without network consensus. It was more of a core founders who decided to do it. There was an attack on a DAO, a decentralized autonomous organization, and basically a lot of money was lost, missing. So they said, okay, so they went back, in essence, one transaction before the attack happened, and they forked the chain. That's why there's an Ethereum and there's an Ethereum Classic. The Ethereum Classic is the original chain, and the Ethereum that we have now is the rolled back chain that never had the transaction of that malicious attack. So you would also be able to do the exact same thing with Bitcoin, though in Bitcoin you would actually have network consensus, because no one would let a multi-trillion-dollar chain completely collapse that way. And it's the same exact way when it comes to the 34% attack. Also, these things are now like even more unfeasible. Like, it was already a problem years ago, and a lot of people, I think, were just trying. I don't think it was necessarily fear mongering, but I think a lot of people who don't understand these things themselves, it's very easy to try and get other people to be afraid for whatever reason might be there. According to researchers, it would cost an estimated $34.39 billion. You have to have $34 billion to be able to 34% attack Ethereum, and those were the numbers at the end of last year, when Ether was priced at around $2,000 per coin. And it would take until June 14th of 2024. It would take a good, 5 months for the attacker to successfully gain the required control over the network. So not only do you have to spend billions of dollars of your own money, billions, to be able to gain control, but it takes months to be able to do so. And by the time you get to June 2nd, there would have already been multiple votes to simply fork the chain, to change direction, so that the other person, cool, you can leave them in the side with their $34 billion spent to attack the chain, while the other forked chain continues just fine as it did before. In the case of Bitcoin, different scenarios prove similarly unfeasible. For example, it would cost an attacker more than $20 billion to provide the number of mining equipment needed to gain majority control over Bitcoin's hash rate. An impossibility due to the actual availability of these things. If you aren't really into computers and stuff like that, the actual microprocessors, people used to use these for gaming. They're now being hoarded and accumulated nearly solely by people who are mining Bitcoin. They're not like readily available. Like, there's very few stores you can go into and actually find what you need. You actually have to order them directly from ASIC, like the company, and they have to specially make them to send them to you. So if anyone was like, if ASIC got a, the word's not bill, if they saw that someone was trying to buy $20 billion worth of machines, they would literally just tell the community and be like, hey, we got a report. Someone's trying to buy $20 billion worth of machines. And that would be squashed immediately, because it would also take a very, 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 very long time to make the processors and also to make the machines. Alternatively, an attacker would need to collude with hardware manufacturers, an unlikely scenario that would also run into supply chain issues, because we live in a very different world right now. Electricity costs to run the massive amount of machines would also prove prohibitive. The findings lead the researchers to conclude that the security of Bitcoin and Ethereum has evolved to a point where the costs and risks associated with attacks far outweigh any potential benefits. Remember, we were talking about that before, and I've mentioned, I understand that the vast majority of people tend to look at price as a major metric for things. You see Bitcoin going up, okay, it's doing well. You see Bitcoin's price going down and people go, oh no, it's doing bad. That's not how it actually works. A lot of the movements behind the scenes are just kind of coordinated by very wealthy people who are trying to kick you out of the market so that they can absorb your coins. 21 million is not a lot. The 21 million with 6 million lost and gone forever with a halving coming is not a lot. 900 coins being created per day. BlackRock and Fidelity are buying 13 times that many per day. There's not a lot every millionaire on the planet. Every millionaire will not be able to own an entire Bitcoin. Do you understand that? I just heard someone gasp. Yes, I know. When you talk about that there are addresses, 150 addresses who bought 150,000 Bitcoin, they have taken away Bitcoin from literal millionaires. There are going to be people on this planet in 2033 who have millions of US dollars in their bank account and in real estate who will not be able to buy an entire Bitcoin. So when you talk about these people are actively trying to get you out of the market, they don't want us here. We are not meant to be here anymore. Bitcoin is meant for the wealthy and for the elite. So anyway, got off track there, but you know exactly what I'm talking about. Very fascinating. Very interesting to see that all these things have moved on to this point. It's not that it ever wasn't really a problem. It's just more of a we just all we had to do was simply just fork the network in the first place, and then we would have been completely fine. But very nice to see. Very nice to get some good news that Bitcoin and Ethereum are safer than we previously thought them to be. Safer not being a word, it just sounds really nice. Yeah, that's the crypto intelligence firm Coinmetrics talking about the potential takeover of the networks by malicious actors. And I mean, if they have a lot of money, go for it. If you feel like wasting several $1 billion to be able to do this, go for it. Yeah. Let's move on. I expected this to be the news of the century, and I barely found it anywhere. Ripple has recently initiated a collaboration with Egypt's Commercial International Bank, or the CIB. It is a significant milestone for the company as it expanded its foothold in the Egyptian market. This comes after Ripple announced that it'll enhance its U.S. presence, indicating significant efforts by the organization to expedite global expansion. So over the last couple of years, Ripple hasn't necessarily been able to do work within the United States. It was because of the SEC lawsuit. A lot of speculation is still abound as to when this is going to end. And the idea is that once the actual lawsuit against them from the SEC has ended, they will then be able to go public. A number of years ago, I made fun of them because I was like, what are you doing? Stop focusing just on the US. And they actually, I doubt that they listened to this channel, but it's more of they announced that they were moving around the world. They started doing business in Africa. They started doing business in Asia, in Japan, in Singapore, in Canada, and a multitude of other places, in Mexico and in parts of Latin America, to increase the actual usage of XRP. There's still, and I just go get a life. There's still so many articles that I see floating around talking about in a negative tone that Ripple sold an enormous amount of XRP in January. Why did they do this? And you read the article, and it talks about how they had the escrow unlock and how a lot of coins left their coffers, if you will. And they're like, this is bad news for Ripple. No, when Ripple sells, they're selling to countries now. For those of you who missed that news last year, they're selling to countries and to central banks who are going to be using XRP, the coin, and also the XRP blockchain to actually create their own central bank digital currency. So Ripple's doing just fine. And according to the latest Egypt FinTech 2024 report by Shehata and Partners law firm, CIB is poised to revolutionize cross-border payments via the partnership with Ripple. Moreover, the bank aims to leverage the opportunity to enhance efficiency in remittance services internationally. The move marks a significant shift as the CIB becomes the first major Egyptian bank beyond the National Bank of Egypt to publicly announce its partnership with Ripple. Moreover, it is expected to be a great opportunity for the company to utilize XRP for cross-border payments. While NBE has previously teamed up with Lulu. What's Lulu? Okay. CIB's foray underscores a broader adoption trend within Egypt's financial sector. We had news from the people from Ripple before that they said a lot of banks have been coming to them over the last few years and basically told them, we want to work with you, but we basically can't because of the lawsuit against you within the United States. So a lot of people are eagerly awaiting for this lawsuit to actually be over. I found this only on a couple of different websites. I was wholeheartedly expecting to actually see this all over the place. I found the actual PDF for the thing, for the Egypt FinTech thing. I'm not going through the entire thing. It's a lot of pages, but yeah, it's all in there. They talk about digital contracts and smart contracts, and and things utilizing Ripple and partnering with them as well. So we've definitely moved into the future. It's just maybe not the future we were all expecting, because things are a bit wacky right now. We're gonna have a lot of conversations over the course of the next couple of months. I already know, as especially when the cryptocurrency prices go a little bit higher, because there's a lot to talk about that's been happening on this planet recently. That's the Ripple is officially working with the Commercial International Bank of Egypt. I assume, as per usual, we will probably get more news of this when they actually do start using it. We always get some kind of a today's a day, start using it kind of news. And yeah, let's move on. Also in, I guess, just as popular news, because this is always in the cryptocurrency space now, Hong Kong's central bank is releasing new guidelines for institutions interested in offering crypto custodianship services. The Hong Kong Monetary Authority, or the HKMA, has published new guidelines this morning for financial institutions seeking to sell or distribute tokenized products. Hong Kong is not as much in the news as they were before. At the beginning of last year, they have allowed cryptocurrencies. What's the word? I forgot what I was going to say. Basically, everything that they said that they have rules and regulations. I think they have ETFs. Do they have ETFs now? We had ETF news for Hong Kong in January. Maybe they get them sometime in March or April. I don't remember the exact time frame anymore, but the idea is that there's a lot of money in Hong Kong by itself. And also we have seen news reports that people who live in mainland China up north, that Hong Kong allowing cryptocurrencies allows these people to basically take a train down and get access to cryptocurrencies in a quicker manner as well within Hong Kong, as opposed to them not being able to trade cryptocurrencies within China. So anytime that we get news that we might potentially see 50 million, 100 million plus people entering the market because of these favorable regulations, it ends up making our popular news. According to the note, the Hong Kong Monetary Authority encourages financial institutions to do their due diligence while researching potential digital asset products to protect both themselves as institutions, as well as individual consumers and investors. The release also says authorized institutions, it says AIs, that's not what that is, are permitted to introduce and sell tokenized products themselves. The release also lays out the responsibility of protecting the consumer at the feet of the authorized institutions. I'm not saying AI there. Why would they shorten that to AI? Do they not know what that is? It says authorized institutions are expected to act in the best interest of their customers and make adequate disclosure of the relevant material information about a tokenized product, including key terms, features, and risks to enable the customer to make an informed decision. Don't really have to read on any further. It's just not even joking. It's just basic Hong Kong news about them trying to figure out how to get like other institutions into the space legally. The interesting part when it comes to Hong Kong is kind of always the same. They basically say that they're going to do something and then they do it. See, you would assume that that's like something revolutionary, but it is, because unlike other countries and institutions and central banks, Hong Kong has consistently released news, or we've gotten news from them that they're going to be doing something, and then like 4 weeks later it happens. Right. So now they're basically letting institutions know how to sell or distribute tokenized products. Is probably going to be some form of securities that are on blockchains, as we've also been seeing that popping up a lot as well. Cool. Fantastic. Awesome. I'm very interested to see what ends up happening to a lot of different countries during the actual like crazy bull run, because we're already in a bull run right now, but we're not in the like, oh my gosh, like what the fudge is going on with the market kind of thing. So between, I mean, between Argentina and Ecuador and Turkey and China and Japan and South Korea, getting back into the market again and all this other stuff, we're in it's not even a perfect storm. It's like a perfecter storm. Everything is kind of set up because normally before in the past, we've heard that good things were going to happen, that institutions would get into the space, et cetera, et cetera. But it's usually like mid bull run or like towards the end of it. Like all this stuff is set up now. Like everything that we needed or wanted is kind of here. It's cool to have the extra Hong Kong cherry on top, if you will. But we have the Bitcoin ETFs. We might get the Ethereum ETFs. Like the accumulation is happening. The bull market is like well on its way. So it's just more of a how much will prices be pushed up if we continue to have entities buying up 150,000 Bitcoin per month. Yeah, I think that is definitely going to do it for this video. I do hope that you've all enjoyed. I do hope you all are having a great day, morning, afternoon, evening, wherever you are, wherever you might be. I do hope it is absolutely fantastic. Thank you all once again for watching, listening, watching, and or I think supporting is the last one. Yeah. And I will most certainly be talking to you all soon. See you.